everybody. Welcome to the Trading Market Technicals morning call video for Wednesday, December the 5th. Another slow grind lower, which is telling me that this market is in a bullish state, at least till the end of the month, and then we'll have to see where we go from there. Markets actually were very, very quiet. Didn't do much until at the opening. We sold off a little bit. We drifted lower on very, very light volume. Found the bottom. And we kind of rallied into the end of the day, and then a small little sell-off at the end of the day. So this is telling me that the small little pullback, really like to label this more of a consolidation, is very bullish. So we're not getting a deeper move lower, which I'd like to see. The VIX is moving higher, but we haven't had that one day, scare everybody out of the market. And that's what's concerning to me, because that day could possibly happen at any time. Also, obviously, we're dealing with this fiscal cliff issue, and the market's getting pulled back and forth from any statement that's coming out of Congress, as well as Europe. We're still dealing with that Greece situation. So, a lot on our plate, but I do think that we are coming into a seasonal strength time of the year, and I also would like to see one more move lower, 1375 in the S&P cash, maybe 1390 even, and then reset itself, make a higher low, and then move into the year-end higher. Again, of course, we would reevaluate it come the first quarter of the new year. Okay, so quiet news. Nothing going on yesterday at all, and that's really, I think, there was no driver of the market. The market just kind of drifted in no man's land. All right, so today, let's look at our econ data. We do have a lot on our plate here today. We have a lot to digest. ISM services, factory orders, unit labor costs, productivity, and ADP, unemployment changes, MBA mortgage index. These are going to be a good driver. Crude inventories as well. As you know, crude's been just kind of, I haven't really showed you the crude chart because I'm not really watching it, but I'm not trading it due to the fact what's going on in the Middle East, and of course what's going on here. We have a lot of issues as far as consumers, they say, not spending now. Same-store sales in a lot of the apparel and retail sector not doing too well. So crude is actually a good driver of that, and it's kind of headed back and forth, and we really need to see a breakout one way or the other. But I do have a lot of gold charts today because as you know, we do trade gold, oil. Now we're coming into a seasonal time of strength. We are actually in it, but hasn't done much. But yesterday, excuse me, we had a little bit of a deep sell-off, and then a good bounce up. So let's see if they could build on that. I'm going to show you some of those charts as well. All right, so let's get into the charts. I want to show you which I haven't shown you in a while, is the oh, excuse me. This is let me get to the NYMO first. Okay, so here's the NYMO. We actually hit that, now we've pulled back again. And as you see here, we can move much higher into this overbought territory. So I would like to see maybe a push today higher, and we are actually higher in the pre-market session. And I'd like to add, China came out last night with some decent data, positive, upbeat talk, and so everybody in the overnight session are buying the DAX, buying the FTSE. So Europe's up. And we have a decent, I have a 3-4 handles in the S&P. So we'll see if that can be held. But China, just definitely a word of caution. China is definitely a manipulator of data. So you got to take that with a grain of salt. Anyway, so we're up a little bit. Let's see if we get a little bit of a pop and then another drop. And I like to see that because it happened in the last 2 days where the market has not sustained any type of momentum to the upside. So if we can get a little bit of pop up in this area, 70, 80, and then maybe outside the Bollinger Band, and then start to roll back in again and get some sort of a deep area into this area here, even a higher low from this low, I would love to buy stocks with two hands. Bar chart momentum index. This is more of a shorter term, and as you can see, look where we are. We haven't done anything the last 3 days. Up, down, and all within a range here. So anything above 101 is considered overbought. Anything below 98, if you will, 98.50 is considered oversold. And here we are stuck right in the middle. So no edge here at all. So we're just going to have to wait and see what happens. That's why we look at our indexes and our indicators every day to see possibly some sort of a clue. All right, so let's look at our NASDAQ record high percentage index. And I mentioned that if you can see here the pattern, Usually we get a drop down, a pop up, and in 2-3 weeks we get one decent move lower. So I'm hoping that this, we are curling now. We had a couple 2 days small pullback, like I said, that consolidation. So we are pulling back a little bit. Maybe we get back down to this 20 percentile, and then we can get a nice little move higher. So we'll see. Let's keep an eye on that as well. VIX. Now, VIX had a decent move for the 3 days. As we're moving lower, really we haven't moved lower, much lower, but VIX had a good, which is telling me that people are starting to get a little fearful and are either hedging their portfolio with puts and or they're just buying puts and buying the VIX as far as looking for a market sell-off. I don't think that's going to be a deep sell-off, if at all. If this could possibly be the consolidation, then we move higher. I mean, it very well could be. I mean, we did pull that back a little bit, not as much as I'd like, but we'll see. But this telling me that there is a little fear coming into the markets. We have moved up higher for the last 3 days, but again, I like to see a nice big spike, break out of this area here, with the market pulling back down out of these Bollinger Bands, come back in, and that would get a buy signal to the markets itself, the equities and commodities. All right, take a look at let's take a look at the dollar. And as you can see here, excuse me, we held that horizontal resistance for a little while. We broke back down below it, and now we're below this. We do have our 200-day, our 20, and now we're below the 50-day. We'll come into this uptrend line. So that 79.50, excuse me, is going to need to hold. And as you can see here, our U.S. dollar S&P ratio chart. Let's see if this can break back up again. Now we're oversold again. So now we're coming into support again. And let's see if the dollar does have a little bit of a bounce. And again, if that does happen, that's inversely correlated with the equities. It would markets would actually start to roll down, start to sell off, and U.S. dollar would at least test this upper end of resistance. And again, a lot of resistance up here. So even if we get back in here, I do see the dollar roll back down again. But look at our ratio chart. Keep an eye on that. Now let's go into. I want to show you gold, and I want to get a seasonality chart here from Zeal. They do a great job with seasonal trends in precious metals. And this is a gold bullion seasonal chart, and we're here in December. And as you can see here, starting in November, late October, we get a little pullback, and right into October, November, we're in the strongest time of the year, strongest seasonal rally. Now that hasn't happened. I mentioned GDX about a month back, maybe 3 weeks back, and the market just basically fell apart. Now GDX is a minor index, so they're more stock based, right? So it's a gold stock index for the gold miners, right? Then it's not just the GLD, which is just the metal itself. So they will follow the market more than GLD would, right? So right now we had a little bit of a pullback, and now we're starting to rally. I do think that gold is is pausing right now, consolidating and getting into a really ready the next leg up higher. So we want to buy gold on these deep pullbacks if you are a longer term investor. If you're just a swing guy and girl, you might want to just kind of wait a little bit. Now I want to show you a couple of things to with the bullish case here. Now, let me just show you the bullish percent gold miners bullish index. And as you can see here, we're just kind of hovering here, right? Now, GDX held yesterday, so we're at these lower levels, oversold. Now we could actually turn back up again, but I want to see. I would really like to see GDX. I would have loved to see this the gold miners index, the bullish percent gold miners index, come down to this 20 percentile and then rally. But we're on the upper end of the range, but which is also saying that this is also a bullish signal here, meaning that we haven't sold off that hard, but something to keep an eye on. Now let's take a look at our gold daily chart. Let's look at the. Actually, I want to show you something else. I want to show you the weekly chart of gold. Now this is end of day spot price. Okay, so this is gold itself, the bullion. We are in this seasonal bounce here from October, from actually June, July, August, September, October. We're just sitting in this this triangle range, right? Now this is, to me, ready for a breakout higher. 1800 in gold would be a massive breakout for probably the last leg, and then it would probably rest for quite some time. But if this gold can break out at 1800, I think you're going to get a big rush into gold. Now let's take a look at the daily chart. It's the daily chart of gold here. I put Fibonacci's on here. We're sitting on a 38% retracement, and this is the bullion again. The 200-day sits easily, nice on the 50% retracement. Now, if gold can at least break lower to the 1662, 1670, maybe one big flush lower, and then a nice big retracement back up, that is a good indication. Apologize. That buyers are stepping back in again. So we had this bearish rising wedge into these areas of resistance, the 20 to 50 to 200 day, and now I'm sorry, the 20 to 50, and now we're sitting on the 200 days just below that. We broke lower, and let's see if we can get one more push lower here, which could only be one day. Gold could sell off 20, 30 points easily in a day, and then start to roll back up again. Watch this ratio, the gold and SPS ratio. See if we could break back up again. As you can see here, we're getting into this oversold area at the 20 percentile in the slow stochastics. RSI is not quite oversold, so that's why I think we have a little more downside in gold. Now, something that's interesting is the GDX. Now, GDX held up really well yesterday, considering gold sold off. And GDX, as you know, is compiled of a bunch of gold miners, which are stocks. And usually, GDX would go first, would move higher before the bullion, and that's the truth. Gold will sell off, will be weaker, and GDX will move higher. So this is telling me that this could be a possible double bottom here. We need follow through today to confirm this reversal candle. If this does not, if GDX just rolls back down and tests the low, then we're going to go lower. Then we'll probably end up going down to this area here, which would be the lower end of this channel. So 44, 44 and a half would be your next area that you look for a reversal candle before you want to buy into GDX again. We were looking at here this bull flag. That bull flag failed, but to me, the GDX and gold is going to be a great trade. If you could accumulate it, I would be accumulating it right now, slowly, small, depending on your share size. But that's a great area to be looking for. All right, so let's go quickly into the indexes. Not much has changed, as you can see here. 3 days. We had that little dip low, we broke that range, and then we came back up and right below it. Now, if we open where we are here, we'd be opening back into the range, so there'd still be no change of what's happening with the Spider 10-minute. Okay, S&P 500 bearish rising wedge. We have not broken below that, so this configuration is still bullish. We just tested the lower trend line, so we could actually bounce and retest that 1423, 1430 area. I think we need to get back up in this area and see what happens with the sellers. If the sellers start stepping in, then we could have a decent pullback. And I'd like to see, again, guys, at least a test of that 200. That would make that higher low from this low, and then a nice big rally to the year end. 60-minute chart, bearish rising wedge here on the 60-minute. We did break below it, and now we're back testing it. So maybe a pushback today to back test this upper trend line and then fail. And that's what usually happens. We get that 1, 2 being back test, and then 3 lower. Okay, and as you can see here, we have that divergence with equities, that S&P moving up, and as well RSI starting to curl back up again. Spiders, same thing. Spiders actually broke the bearish rising wedge. We closed below it, so let's see if that gives us any follow-through. Again, we're overbought now in the stochastics. MACD's not quite overbought, but stochastics are telling me that we are overbought, so a little bit, little lower there. Oh, excuse me. Spider 30-minute. Inverted head and shoulders, still lower from here. Again, still a valid bullish setup. Okay, so just keep that in mind. I'd be really careful shorting stocks here, guys. And if you are shorting for the day, that's one thing. But if you're shorting for a swing trade, be very, very careful, because anything, they could say anything coming out of Europe or Congress, that the fiscal cliff has been resolved, and then this market's just going to get momentum to the end of the year. And I would hate to see anybody get really stopped out or really hurt on the short side. All right, transports hasn't moved yet quite. We are getting into that seasonal trade but we are into this confluence area of support trend line, and we have moving average support here, 20 and the 50 and the 8. So let's see if this thing could build momentum on this reversal candle and start moving higher. Diamonds, which is the Dow Jones ETF. Again, upward channel, testing lower channel here. Again, still in a bullish configuration. We are a little bit overbought, so we could look to test maybe that 20, or maybe get back down to this gap area here at 128, and then start to move higher again. So that's what I'm looking for. I'm looking for a little bit of a pullback. So IWMs, we took them the opposite way now on the Fibonacci. We've rallied from here to here, 61.8%. Logical area for a pullback. Maybe we pull back to that 38%. Back down here, which is the 200-day moving average. Fill that gap, at least one of them, because we have two here. Two big gaps that need to be filled eventually. But maybe we get that one gap, and then we rally back into the range, and then New Year probably sell off and retest these lows at one point. Apple. Now, Apple actually really had an ugly day yesterday, and that's something that I'm not really too happy the way Apple looked. Again, still holding bullish is okay. Again, you know, as you know, the stops need to be really dramatically high because you're trading a $575, $600 stock. But we still, believe it or not, in this little symmetrical, little channel, the sideways consolidation here, so needs to hold the low. If Apple breaks the low for yesterday's low, then I think Apple's going to be in trouble. But if we can stick here, we're above the 20, below the 200, and I knew that 200-day was going to be a sticking point for Apple. But if we can get back above that 200-day, I think Apple will have one big push to the upside, and I think that's going to be it for Apple for quite some time, unless obviously something really changes. But right now, holding it long is still okay. A break below that 20, that 560, I would be out of that stock. That's me personally. Then I think Apple's going to have some issues. If it can't rally back from having a 5-6 day consolidation here, it can't muster enough movement to the upside, which I still think that there's a possibility of the of Apple issuing a special dividend. If that happens, all bets are off to the downside, guys. Just want to make sure to make that clear, just in case. Qs, lastly, are the Qs, same thing, 20 to 200. We have the 50 and the 200-day. We're sitting right here. Nice little reversal candle. Not really getting anywhere, though. So let's really see what happens with that. Again, rallied from the zero line here to the 61.8%. So we're going to have a little bit of work to do to really get back above it. All right. Okay, guys, a little bit longer than usual, but I wanted to get that gold charts out to you. Very interesting chart. I think we're coming into a good time of the year where we can make a lot of money here. But we need to ride out the choppiness. This is very choppy 3-4 sessions, and we don't want to get chopped up and really start burning the accounts. Let them sit tight. 1 or 2 trades, they don't work. Just step aside a little bit until volume and momentum comes back into place. Remember, non-farm payrolls tomorrow on Friday is going to be a big area. Sorry for the longer video, but I wanted to get this out to you, and I wanted to cover a lot of key points. Have a great day. Talk to you tomorrow.